Hello everyone, welcome back to the POWERHOUSE Ideas. I hope all of you are doing good at your places. Just like the previous week video of the probable swing breakouts, we have come up with another video this week also, in which I'll be sharing with you some of the swing trading setups for the coming week. All you need to do is that keep these stock setups in your watch list and continuously watch them during the coming days so that you don't miss some of the profitable opportunities. I'm also thinking of continuing this on every weekly basis, on every weekends, wherein I'll be sharing some of the analysis of the probable swing trading breakouts with you. But may please note that this is not just a trading, this is not a trading advice for you. It is just our analysis which we are sharing with you. So don't take it as a trading advice. We are not SEBI registered analysts to trade or to give an advice to you for any trading. So this is just our analysis which we are sharing with you. You should also watch the previous video on swing trading setups given in the last week on Friday. It will be having a similar thumbnail. So the first stock for today is Ambuja Cements. As you can see that after an uptrend, it has been in a long-term uptrend. You can see on the chart in front of you, this stock has created a resistance on this dotted line already marked on the chart. This resistance can be seen by these circled blue figures wherein it shows that resistance has been created at this level and stock is not able to move above this resistance. Now we know that as per technical analysis, it is said that a resistance turns into a support when it's broken. So what we need to do is that we need to wait for it to break upside and come back for a retest and give us some bullish signals on this support. It will tell us two things over here, that it has started working as a support over here and the bullish signal, a bullish candle close in your direction will be your entry. So after a breakout, we need to wait for a retest. On the retest, we need to take an entry on a bullish candle close. May please note, it should be taken on a bullish candle close. Merely taking a trade at the mid of the day won't solve your purpose. You need to wait for the candle to close for that particular day, at least till 3:15 of that day. And you also need to see the volume below. If there is more than average volume on that bullish candle, then you can take an entry, keeping the stop loss below the previous swing low. Now for the purpose of keeping the stop loss below the previous swing low is that when a stock moves in uptrend, it creates higher highs and higher lows. So keeping a stop loss below the previous higher low is the safest place to keep a stop loss, because if the stock closes below the previous higher low, then the uptrend will be invalidated and we should quickly move out that position. So on the bullish candle close in your direction, that is in the upside, you can take a trade over here, keeping a risk to reward ratio of 1:2, a stop loss below the swing low and a reward of 1:2. So this is the probable setup, first probable setup I have shared with you. The next is Apollo Hospital. Apollo Hospital I have also shared in the previous week. I'm again sharing it because it has already given a breakout and coming back for a retest. Now what you need to see is that keep a stop loss below the swing low, the reasons already explained to you, and then wait for a bullish candle close. You should wait for a close of the candle on this resistance which has already turned into support. So after it will work as a support, you can take a trade over here, keeping a stop loss below the swing low and keeping a fixed target of 1:2. May please note that keeping a fixed target of 1:2 or 1:3 in every trade is very important. I'll be explaining the reasons for that in another video in which I will cover the mathematics of trading. So the next stock for today is BPCL. BPCL is from refining energy mineral sector. This stock has recently given a breakout with a good volume over here. You can see over here that it has given volume more than its 10 days average. So seeing the volume and seeing the breakout, you can take a trade over here, keeping the stop loss again below the previous swing low, because that is an area, if it is broken, then this uptrend should have been said to be invalidated. So you can take a trade over here, keeping the stop loss below the swing low and a risk to reward ratio of 1:2. Another reason for suggesting this trade is that after a short-term downtrend over here, after a long-term uptrend which was seen over here, there was a short-term downtrend which has been broken. The share has consolidated, and after consolidation, it has started moving up. So there are chances that the target will be achieved in this stock. But you can see that the next resistance is like somewhat likely over here. So we know that at a resistance, the stock may face some certain difficulty and may come down. So whenever stock reaches this point, you can shift your stop loss to cost and then continue your trade. so that if in case the stock turns back from the resistance which is over here, you can move out of the position on no profit no loss situation. till that time you have to keep the stop loss of 1:2 only. This was the third trading setup. The fourth is Deepak Nitrite. Deepak Nitrite is from processed chemicals industries. As we can already see that stock is moving in a higher high and higher low position. It has already given a breakout and coming back for a retest. If stock makes a retest over here and makes a bullish candle close over here, you can take the trade on a similar setup, keeping the stop loss below this key level and taking a trade of 1:2 risk to reward. The next trade for today is Jindal Steels. As we know, the entire steel sector has been moving in an uptrend and has been given a beautiful breakout. So this is a stock from the steel sector. We can see that after a long-term uptrend, the stock has consolidated over here a while and created a resistance. After creating a resistance, it has already given a breakout, and you can see the volume below. It has given a volume more than its 10 days average. So this can also be a probable swing trading setup in which you can take an entry on a breakout basis only, seeing the volume, keeping the target of 1:2, that is a stop loss below the previous swing low and a target of 2 times as compared to the risk taken. The next is Lal Path Lab. This was also suggested in the previous video. In this video also the levels remain the same. We need to wait for this level to be broken and come back for a retest. On a bullish candle close after a retest, we will assume that a support has been created. Then we can take a trade over here, keeping a risk to reward ratio of 1:2 and keeping a stop loss below this support or below the swing low, as the case may be. The other stock is Maruti. We can see that after a long-term uptrend, the stock was in a short-term downtrend, but now the stock has broken this downtrend, this trend line, and started moving up. But should we take this trade immediately after breaking of this trend line? No, because it can be a normal retracement also, and it can go up and again started falling. As we can see in the past also, whenever the stock comes up, it goes up for a normal retracement and then again fall, then goes up, then again fall, then goes up, then again fall. So what we need to do is we need to wait for break of this pattern. This pattern will be broken when the previous consolidation, like in every case it has created a consolidation, when the previous consolidation will be broken and stock closes above this level, this highlighted level. After the close above this highlighted level, we have to wait for a retest and a bullish candle close. In this case also, we have to keep a fixed risk to reward ratio of 1:2 or 1:3, as the case may be, keeping the stop loss below this level or below the previous swing low to be on a very safer side. The other stock is Motherson Sumi. Motherson Sumi, after an uptrend, has been consolidating and it is giving a U-shaped recovery in this case, as you can see on the screen. So what we need to do is we need to keep this stock also in our watch list and also wait for it to break upside and come back for a retest and make a bullish candle close. We can also see the volume, that consistent volume more than the 10 days average has been coming in this level. So this can also be a probable swing trading setup which can give you some handsome profit. The next is Thyrocare. Thyrocare was suggested in the last week video also. I have taken up this stock specifically in this video also because I am sure that this might be a very good swing trading setup for you all. We know that after a long-term uptrend, the stock has been in a short-term downtrend. Now that trend has been broken and stock has been consolidating for a while. After a breakout of this dotted line, it has come back for a retest, and we can also see that volume has immensely increased in this consolidation phase. The volume was very low before that, but in this consolidation phase, the volume has immensely increased. So there are some smart people who are buying this stock in this region. So there is every possibility that stock will go up from this area because a huge number of buying has been done in this possible region. And retailers are not able to create this much of volume. It is surely some of the smart people who have accumulated this stock in this area. Now let us also see this stock on a multi-time frame. Let us see it on a 3 hours time frame. We can see that after a long-term downtrend, after a short-term downtrend, this stock has consolidated for a while and has given the breakout of this region. After giving a breakout, this stock has come back for a retest and there is a rejection candle. We can see a rejection candle over here. So if we see another candle, a bullish candle close, even on 3 hour time frame, then also we can take this trade, keeping the stop loss below this level, below the previous swing low, and targeting 1:2. The next swing trading setup is Escorts. We can see that Escorts, after being in a long-term uptrend, it has been consolidating for a while and given a sharp fall after this consolidation. Now after that sharp fall, it has broken this channel over here that was on the previous trading day. So now let us see on a shorter time frame, on a 3-hour time frame, what the stock has to show us, what the chart has to show us. Now we can see that stock has been following this channel but has ultimately broken this channel, but is now being respected, is now respecting the previous high. So first we need to let it break above this level, and second we can see that this highlighted line, purple line, is of great importance as it has worked as a previous support region. So there is a possibility that it might work as a resistance this time. So what we need to wait is that we need to wait for the break of this level and a retest of this level, so that we can say that the short-term downtrend is over and an uptrend has been started. Then only we should take a trade, keeping the stop loss below this level or below the key level, below the previous key level, which can be more safer, but it will be having a more bigger target, then it will be taking more time. So this purely depends upon the risk appetite and the risk you are willing to take. You can keep a stop loss below this level, which will be exactly safe because this area has already worked as a support. So in this case also, if this stock closes above this level and gives a retest with a bullish candle close, then we can take this trade. The next trade is HCL Tech. We can see, let us see it on a daily time frame first. We can see that the share is creating a channel movement. The share is moving in this channel. So does that mean that we should take a trade over here? As per my suggestion, you should not take a trade at this level, because we can see when the share came down at this level in the previous history, in the recent history, it came up and again fall. So now there are again chances that it can go up and again from this level. So if we want to take a small trade like this, then you can certainly take it, but we need to trade with certainty. We need to trade with some confirmation. So what we need to do is we need to wait for this level to break. All we can do is that we need to wait for this level to break and let the stock come back for a retest and for a bullish candle close at this level with a stop loss below this safe area. With a stop loss below this, we can keep a risk to reward ratio of 1:2. The second last trade for today is IOLCP. This stock may take some time in giving you a trading opportunity, but what I saw is that after a long-term uptrend, this share has given a very good uptrend and now consolidating for a while. So if it breaks this channel, then we can take a certain trade, but we also need to wait for break of this dotted trend line, because it has already worked as a support in the recent past. It may work as a resistance. So we need to wait for the break of this dotted line and a retest, while keeping a stop loss below this level and a target of 1:2. We can take a trade on this stock. The last stock for today is CDSL. CDSL has been in a long-term uptrend. After that, there is a short consolidation. Let us see it on a shorter time frame, that is a 3-hour time frame. Now we can clearly see that stock has been creating a resistance over this level, like this dotted line. So what we need to wait is that there are rejections at this level. What we need to do is wait for this level to get broken and let the stock come back for a retest, and a bullish candle close in your direction will be needed. You can keep a stop loss below this level or below this line. It all depends upon the risk appetite and the risk taking capability. If I will be on your side, I would have kept a stop loss under this level and targeted 1:2 trade. So this is all which I have for you today. These are the probable swing trading setups for the coming week. Before closing this video, let me give you some of the tips which you need to follow to be profitable in this market. First of all, always remember, don't trade in a stock which is in a long-term downtrend. The stock which has been in a long-term downtrend for more than 1 year, 2 year, 3 year, how is it possible that you will take a trade and it will start moving up? So always avoid a stock which is in a long-term downtrend. Second, never trade in the push phase. Also, always wait. What is push phase? When the stock is moving in the direction of its trend. When the stock is moving upwards, so never take a stock at trade at that time. Always wait for a retracement, a dip to be created. Always take a trade at a dip or a retest of the support. So these are 2 tips which you need to remember always to be profitable and to avoid losses in this market. So I'll be coming up with more such videos, with more such trading setup in the next week by the weekend, so that it can help you identify such trade and also save your time. Till that time, take care. I'll see you in the next video. Bye bye.